Uber announced their earnings this morning, and I wanted to update my analysis on this company. It's a stock that I own, and I own quite a bit of it. I really believe in the company. I really like the business because they don't have to buy cars nor hire drivers. This is all a part of the sharing economy where people that want to gig or have a job that they're their own boss can have a car and drive people around. Uber benefits, drivers benefit, and the company's been growing quite nicely. They have been threatened with the robo-taxi innovations coming in and disrupting them. I think that's overplayed. I think robo-taxi is going to take a while for it to really have a meaningful impact on the Uber business. And second, I think Uber can actually take on robotaxi as an opportunity for the business and enable them to have a greater profitability by partnering with companies like Waymo, which they are doing in two major cities in the US, and partnering internationally with Chinese robotaxi companies, which they're doing in Abu Dhabi. So let's take a look at the earnings and see what we've got. So in general, I really like the revenue that they reported. They reported 18% growth year over year, which is very good. And that's consistent with the trips that were booked and also the deliveries of food that were made, kind of very consistent around 18 to 20%. An impressive metric is free cash flow. It jumped up 105%, well above what I expected. 105% growth on free cash flow year over year. That's incredible. It goes to show that this sharing economy company, which doesn't have to buy cars, hire people, that kind of thing, there's just a lot of value for Uber to extract out of this business and load up the balance sheet with cash. Uber could acquire other businesses, they could buy back shares. It's just a very valuable business because of this fact that they generate high free cash and they're a relatively young company still. So I really like that about their announcement. Other things to me come in line with what I expected, and I really like the stock. Uber is a $146 billion market cap. Their revenue is up to $42 billion, and their forward P is 29.96, which is rational considering they're growing at 18 to 20% per year. They're already a big business, so good job, Uber. Their forward guidance, they didn't put forward guidance out there that was just earth shattering. It was good guidance, but it wasn't incredible, and the market didn't like that. Also, their profitability wasn't quite what the market wanted, so the stock is selling off in the pre-market hours. I think it's a buying opportunity for me, but let me continue on. I want to finish my analysis and then make a decision on what I'm going to do with the stock. So, analysts believe it's a strong buy. Take a closer look at that in a bit. When we look at the 1 year, you see where the stories of robotaxi have really taken the stock down and have presented really good buying opportunities, frankly. I'm up on the stock nicely because I bought during those times when there was a lot of fear in the market over Uber, and I'll continue to do that. The company has really good fundamentals. They have a business that I really like. I think once this thing plays out with robotaxi, it's my expectation that robotaxi is interesting, but it's really expensive. If you look at Waymo, each car costs like $250,000 to put in service. That's a lot of money. Tesla's saying, well, we can cut corners and just put a car out there that wasn't designed exclusively for robo taxi. And I cringe to think if a few Tesla vehicles, run over people, cause bad accidents, that's going to be shut down quickly because it just isn't ready to be a self-driving car to really do all those things. When you look at the difference between a Waymo and all the equipment it has, all the sonar and so forth that it has, it's far more equipment and safety features than a Tesla or another car that was just really designed to be driven by a human. So I think robotaxi is going to take a while. It's not going to be an immediate thing. Maybe in 10 years, we could expect that it would be normal for most cars to pick you up and give you a ride, are really much driverless. Okay, I'll take that. But for the next couple of years, I think Uber is going to continue to flourish. And again, I think Uber is going to take robotaxi and make it an opportunity for themselves. When we look at the forecast of what analysts are saying, looks like 33 analysts cover it. They also think it's discounted. So that's really interesting. And really, the worst case scenario is a $77 price target. That's above its current stock price. So analysts believe in Uber's fundamentals and it really are not all that concerned with the whole robo-taxi story either. When we look at revenue, it's been growing nicely and it's really expecting to grow quite nicely in 25 at 15%, 26 at 15%, and then 12% in 27. In 2027, these guys will be a close to $67 billion revenue company. And that is great. Going from 13 billion just in 2019. Awesome. Earnings per share will expand nicely. it's expected to expand by almost 30% in 2025. Very good. Their PE is really dropping in the forward years because they're getting much bigger, much more profitable. So I think the stock's going to do well over the next couple of years because investors will see that, hey, this is a growing business. It makes a lot of money. It generates a lot of free cash. I updated my analysis on Uber and I analyze free cash flows and I discount those free cash flows to get to a target price on the company using free cash flows. I also use earnings per share and I blend the two and see what I think the company is worth and what my price target and discount are on Uber. The free cash flows were better than I expected. So the free cash flow forecast improved. And really, the cash flows are just incredibly valuable for Uber and they're just growing those free cash flows. They could acquire other businesses. Maybe they acquire Lyft. That's only like a $6 billion market cap company. That would make them bigger. And the new administration may allow it. I don't know, maybe. And when we look at earnings per share, I'm using a PE of 36. They deserve a 36 because they're growing so well. When I use a PE of 36 and a growth rate of 25, which is realistic, I get a nice discount using earnings per share. When I blend the two, this is a highly discounted stock. This is a high growth stock in a industry that didn't exist 20 years ago, really started coming around 10, 15 years ago. I really like that the space itself is expanding, especially internationally. And new innovations are coming into the picture, like robo-taxi, which could be a really good opportunity for Uber. Analysts on stock analysis, they think it's discounted by about 30%. So overall, I think Uber is a really good opportunity for me. And I would be buying shares of Uber, especially today on this pullback. I'll gladly buy some shares. I think the stock at times gets sold off, but every time I look at it, I'm looking at a really valuable business and I just want to own more shares. So that's my analysis on Uber. I hope you found it interesting and I hope you do really well in the stock market in 2025.